Lewison and welcome to financialspreadbet.com. In this article we're going to be discussing what fundamental analysis is. Fundamental analysis is the analysis of actual company financial data and market data related to the company's business sector and market. Basically, it's looking at the financial health and market growth of the company by analysing company accounts, reports, statements, markets, and so on. In many ways, this gives an overall value placed on the company and where the company, and general opinion on the market, that company is likely to go. However, inasmuch as this is a good way to find out the value of the company and where the directors believe the company is heading through their statements and where the current market sector may believe it will be heading, tends not to be what is actually reflected in the actual trading of that company's stock. A good example is Apple stock. Now, as I write this, the stock market, the stock at one point a few weeks ago was worth around about $700 US per share. Now, in just over 2 weeks, the stock is somewhere near $500 US. Now, these are just general figures of which I am aware Apple is trading at, but they serve for this example. Now, in those 2 weeks, the value of Apple stock had dropped by around about $200 US per share, which is an enormous amount. Now, this is an extraordinary amount for Apple to lose in the value of stock. Now, given such a massive drop in value, you would imagine that Apple gave out some disastrous shock news that they had lost billions in profits or that their products had massive faults that needed a recall. But no, in fact, during that time, not long before they had released the iPad mini, which apparently was a success, not massive, but it still sold out, profits still incredibly healthy, and new products in the pipeline, and once again kids wanting iPads, iPods, and iPhones for Christmas, in fact adults too. So really the desire for anything Apple is still as strong as it always has been since they introduced the first iPhone years ago. So what had changed? Well, nothing really in terms of the fundamentals of the company, yet the very living, breathing market that is trading the Apple stock dropped it like a stone. Partly that drop was by a sellout by an investment bank taking profits on Apple stock it held. Part of it was simply that given the meteoric rise of the price of Apple stock, few feared that it was impossible for Apple to keep the momentum going. More so with the lackluster product releases this year, despite record profits once again. Now, have you managed to see what I'm getting at? The stock dropped based on fear, nothing more. This had nothing to do with the fundamental analysis. Apple hadn't changed, in fact had once again grown. Here then is one of the biggest issues that many have about fundamental analysis. It's great for finding out the actual market worth of a company and where the current hypothesis of the market and may be heading. But other than that, it is not an accurate barometer of what the market does believe the company is worth, which is reflected in the stock price. Also, traders reflect their hopes and expectations on a company too. Apple for now is the darling of the tech industry, but one day that shine will be removed and someone else will take their place. When that does, for no reason whatsoever, the stock will drop, simply because it's not trendy. Another we could look at is Facebook's recent IPO. Fanfare and all manner of spin was used to make this seem attractive, yet fundamentally it was looking shaky at best. Not broke, of course, but given that the company can only profit really from advertising, and its model is nowhere near as effective as Google's, analysts were wondering how on earth Facebook could ask such a high floating price. When they did open the IPO, the inevitable happened. The stock staggered a little, and after a quick peak, dropped in a month or so to 2/3 of its initial IPO. Personally, I still think it's overpriced. Once again, this is where fundamental analysis saw reason. People were looking at the value of the company, the float, the market they were in, and where they expected to be, and none of it, well, little of it, made sense. As a result of this, when the stock did float, there was a brief period of bullish activity as retail buyers went crazy for stock. Every man, woman and dog seemed to be buying stock in Facebook. Then, for those that understood fully, it was overpriced and stock collapsed. Fundamentally, at the start, this is where knowing the fundamentals helped and worked in favor. So as you can see, there is good and bad in fundamental analysis. It will always have its place. However, as a means of speculation, few, if any, from what I know, use it. Nearly everyone uses technical analysis. That doesn't mean that you should ignore it. As with the Facebook example, it can help as a means to judge what is likely to happen to a stock before the trading of a new stock when it goes IPO.